Today is Wednesday, November 11th, and this is a post-market review for the stock market activities today. What did we see in the activities today? Again, it is Veterans Day, so happy Veterans Day to everybody, specifically service members past and present. And as we discussed yesterday, Veterans Day is usually a very low volume day, and we see the indices climbing higher usually. Today was no different, even though we saw a mixed picture between the Dow, the Nasdaq, etc. And perhaps it could be characterized as the rotation of the rotation. We've been anticipating the human being traders' reaction to Monday's big rotation, the computerized rotation. And so far, the human being's reaction seems to be, we're not buying it, we're selling the pop in the reopening names, and guess what? We're migrating back to the big tech, and then we will do the thinking whether this was the right move or not. Playing the yo-yo game, moving from one sector of the market to the other based on the flow of news, refusing to acknowledge that either side is not very attractive to be in at the moment. For the reopening names, it is a very long way and journey for recovery. And for the stay-at-home names / momentum names, the valuations have been extended very severely. Meanwhile, as we see from corporate earnings, the growth in these names is plateauing and trending lower. And by the way, I want you to do this exercise. Go back to CNBC on Monday and hear what they said when we had the big rotation, the algorithmic rotation that happened on Monday. They were saying, we've been trimming our tech and growth positions in the last few weeks. Obviously, trimming as they were talking about their nose hair, but somehow it keeps growing again. However, today they flip-flop and they've been saying a very different story. Today they said, we told you so. We told you not to get out of growth and tech and to buy the dip and fade the pop in these reopening names because blah, 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 blah. Again, it is deception. It is flip-flopping. Most of these guys are holding massive big tech positions and they're looking for a potential exit so they can rotate quietly to the reopening names and create a lot of bag holders in the process. So there will be lots of backstabbing going on right here. Number one, for those who have been pumping the reopening trade, the moment these names popped higher on Monday, they sold, and they left a lot of guys and gals holding the bag from the pop. And the same thing will happen with the tech names. You see the dip buying today and the rebound, and these guys are going to continue to prop it up and pump in and say, hey, growth, you cannot move out of growth. And then at some point, they dump their holdings after what they've seen on Monday, and they'll tell you, oh yeah, we started to liquidate some of our positions and migrate across the aisle, etc., leaving, again, bag holders in the momentum trade. Because this is what happened after hours. We have the news now. The Moderna's vaccine results are about to be released imminently. And this is what's going to happen. For the geniuses who decided that it is safe to go back to growth today, what's going to happen is in the next few days, you will see more dumping of vaccine optimism, whether it's from Lilly or Moderna, Johnson & Johnson, AstraZeneca. And again, you will see that yo-yo game, rotation of the rotation of the rotation of the rotation. So the point here, either you have a specific investing strategy and an outlook that you're going to stick with, or if you're trading day by day, following the flow of news and where the hot trades are, you will be drowned in the back and forth in the market. And with that introduction out of the way, let's cover the market. And here we go. The Dow Industrial Average closing in the red, a decline of 23.29 points or 0.08% in the downside. Pretty much in the flat line here for the Dow Industrial Average, but the outperformer of the day is the Nasdaq, rising 232.58 points or a gain of 2.01%. The S&P 500 also in the green, a gain of 27.13 points or 0.77%. And which sectors led the market today? It is no-brainer. Technology at number 1, capturing the gold medal. At number 2, consumer cyclicals, aka Amazon, and gaining the silver. Number 3, Facebook or communication services, and capturing the bronze medal. What lagged the day? Basic materials, industrials, energy, the winners from the last couple of days. And here is the coverage of the futures market. Right away, you see the gains in oil are starting to settle down, and today we saw very minimal and modest gains in crude oil. What about softs? Major gains for coffee, closing almost up 2% or so, but we see sugar declining again. Lumber muted, OJ gaining a little bit. I bought some contracts in OJ expiring in 21, and I intend to hold these for a while. Cotton, coca also muted today. What about metals? We see gold, silver, modest declines. Copper, the same picture. However, more pain for platinum and palladium. Palladium specifically down over 6%. I've been anticipating and waiting a pullback in palladium to enter this trade. We saw massive gains in palladium last week, and the retreat today, I'll wait on it, see what it does tomorrow, perhaps Friday, and then enter a position in palladium. Meats, muted day across the board. And what do we see in grains? Soybean oil gaining about 3% today, massive gains. However, we see corn, wheat, oats retreating more than 1% in today's trading action. And moving on to the big casino, the options market, and let's see what the gamblers doing in this very quiet Veterans Day. NEO coming up at number 1 with 1.6 million contracts. The volume of options trading in NEO has been absolutely stunning the last few weeks, and it is no wonder why the stock price is rising. A massive gamma squeeze took place the last few weeks, but again, every pump will be followed by a dump. Once these option sellers who got gamma squeezed make back their losses, perhaps some profits, they will dump the name. But here we are today. We have 1.6 million contracts. 62.7% of those were calls. Apple number 2 with 1.1 million contracts. Oh, about 60% of those were calls. Alibaba at the 3rd place today, coming up with 438,000 contracts today. About 66% of those were calls. And here are some interesting trades that took place during trading hours today. Starting with Datadog. Somebody bought the 70 puts expiring on the 20th of this month, the monthly expiration. And again, this was a 15 cents a piece, so it might look cheap for you, but check out the volume here, over 42,000 contracts for this trade alone. It is very significant, and you cannot ignore it one way or the other. What about Pfizer? They're buying the 41.5 calls expiring on the 4th of December. Again, massive volume for this particular trade, over 19,000 contracts today alone. Here's another trade for Peloton. They're buying the 114 calls expiring on Friday. And perhaps the Beyonce optimism could take us all the way there, although it is doubtful, specifically if we see the rotation of the rotation of the rotation. Here's another very interesting trade that I saw for MU Micron. They're buying the 62.5 calls. And again, this is a very bullish call because they're expecting over 10% gains by expiration day, which happens to be in December, the monthly expiration in December, which happens to be on the 18th of that month. More bullish activities in the semiconductor sector. You see TSM, Taiwan, they're buying the 96 calls expiring on the 20th of November. Likewise, AMD, they're buying the 88 calls expiring in the 4th of December. Massive bets here on a rebound in the semiconductor names. Here is another interesting trade for Zoom. We saw Zoom rebounding significantly today, but somebody's fading the pop and taking a lot of risk because this is a very short-term trade. Buying the 375 puts expiring on Friday. Again, this particular person is looking for a downside of over 7% for Zoom from this point on by Friday. And it is a little pricey because he or she paid about $1.25 for the trade. And here we go with the suspicious activities. Moderna. You heard the news after hours about Moderna that they are about to dump their vaccine results imminently. And somebody here is doing a debt spread very intelligently, by the way. And what they're doing is they're buying the 95 calls in Moderna expiring on the 24th of December, Christmas Eve. And they're selling the 100 calls, same expiration date. All in all, lowering the entry price to about $1.60. I do like this trade, the way it's constructed, because even if Moderna doesn't reach an upside of over 20% by Christmas Eve, if we have any positive news regarding their vaccine or we see a pop in the name, this trade will be very, very profitable for this particular trader. Continuing with interesting trades, look at that name, General Motors. And by the way, I issued a tweet today saying that I liquidated my entire General Motors position, and I will explain that to you in the charts because we will cover GM chart along with MasterCard and Alibaba. So stick around for the charts analysis coverage. But here is a bid that I agree with, buying the 37 puts expiring on the 27th of this month. And I did follow this trade. I sold my entire GM position and I bought the exact puts that you see on the screen right now, expecting further downside for General Motors, and perhaps I will re-enter when the price gets a little lower to more favorable re-entry position. And here is another call for the semiconductor names, AMAT, A-M-A-T. This is for Applied Materials, and they're buying the 75 calls expiring on Friday. Now, my guess that this is a one-day kind of trade. You buy it today, and by tomorrow, if you see a pop in AMAT, you sell it for a small profit and you move on. The likelihood is we're not going to see AMAT trading at $75 by Friday. Here is another interesting trade for Starbucks, buying the 87 puts expiring on the 27th of this month. Starbucks been riding high, and perhaps this particular trader is looking for a potential point of profit taking in the decline period for this name. And the last three trades we're covering tonight are for reopening names. You see the three names at the bottom of the table: AXP, American Express, HLT, Hilton, and NCLH, Norwegian Cruises. All seeing bullish bets here, and this is the beauty of the market and what makes a market. Today you saw lots of traders moving back to growth stocks. However, another segment of traders are betting on a rebound yet again for the reopening names, perhaps on more potential vaccine headlines. And the trade here for AXP, buying the 125 calls expiring on December, and for Hilton, buying the 110 calls expiring on the 20th of this month. Norwegian Cruises, they're buying the 20.5 calls expiring this Friday. This is an expectation of a pop of about 5% or so. Very short-term trade, but we see another trade for Norwegian Cruises here, buying the 21.5 calls expiring next week. So again, you combine the information and you see the bullish bets in Moderna, and now we're seeing bullish bets regarding reopening names, and perhaps we will see the rotation of the rotation of the rotation. More vaccine headlines coming your way. And speaking of vaccines, let's move on to cover the headlines that shape the day. And the first headline, and perhaps the most shocking one, is that Pfizer CEO cashed 60% of his stock position in the company on the same day they announced the results of their COVID-19 vaccine. Now, Pfizer and the CEO are saying that this was pre-programmed kind of selling, but who the hell programs selling 60% of their entire stock position? No. I'm not buying this bullshit. This was intentional. The man knew exactly what he was doing. This should be investigated. And by the way, this kind of news will destroy the public's confidence of the vaccine. If corporate executives in these pharmaceutical companies are going to dump their shares upon the announcement of the vaccine, what kind of trust do we have for the safety and efficacy of these vaccines if corporate executives themselves are not buying it? And by the way, since Pfizer said they have 90% success rate in the vaccine, here comes the Putin vaccine, the Russian vaccine, saying, oh, we got 92% efficacy in our vaccine results. Why not make it 95? How about 100% success rate? Let's just make it 92, right? So it sounds a little believable. But the good news is, if you're looking for a vaccine, it's like walking into the buffet. You have a variety of options. Eli Lilly, Pfizer, AstraZeneca, the Russian vaccine, the Chinese vaccine, the South African vaccine. Pick your pick. Do you want to turn into a zombie or Frankenstein? We got every option available for you. And by the way, now that we have more details about the Pfizer vaccine, we now know that realistically distributing this vaccine will be very, very challenging and require very sophisticated set of infrastructure, meaning that the first set of nations and people who will get to access this vaccine are, wait for it, the rich. Naturally, of course. Now remember that the rich are pretty much immune from any COVID-19 drawbacks. Their stocks at all-time highs. They're having a great time. The pandemic is the best thing that ever happened to them. But let's do a little checkup and see, maybe these poor rich people are suffering just a little bit, and I cannot fathom the fact that the rich can get hurt because they're very sensitive people. So let's check on the rich and see how they're doing so far. Oh, here we go. The global rich are rushing to buy UK country estates. I guess they're doing fine after all. God forbid these rich would feel any pain from the biggest crisis in our lifetime. Thanks, of course, to the Fed and central banks across the world. And speaking of the Fed, here is the New York Fed President Rosenberg saying that the next 6 months will be pretty choppy despite the vaccine news. And rest assured, the pretty choppy is not going to chop the rich. It will chop the poor and the middle class. So this piece of news is for you poor people and middle class, not the rich. The rich are fine. The next 6 months are probably going to be the best 6 months ever to that particular group. And here is the reality about the economy and the distortion between the rich and the poor. The rich are buying countryside mansions in the UK and across America. The sales of mansions and luxury real estate have been skyrocketing. Meanwhile, for the rest of you bums, millions of Americans have stopped paying their mortgages, and it could mean a foreclosure wave in 2021, says Business Insider. Yeah, I could see the health of our economy and consumer spending going pretty well, and all of these people who stop paying mortgages because they don't have the money, somehow they'll find it somewhere to buy new iPhones. So keep buying stonks. They only go up. Even though the consumer is getting weaker and weaker every single day. But hey, I guess the Fed is gonna compensate and buy Apple's entire stockpile of iPhones. And here is some news from Warren Buffett. Says that he likely sold $4 billion of Apple shares and perhaps dumped even more Wells Fargo stock last quarter. And if this piece of news is confirmed, remember that Warren Buffett has the best math people in the world working for him. And if he thinks that Apple is overvalued right now and he's dumping $4 billion worth of shares, then how long before the retail trader realized that they're pretty dumb holding and buying Apple when the smartest investor in the world is dumping it? Remember that the Robin Hoodiots love to quote Warren Buffett to justify their stupid moves in the market with no knowledge whatsoever of Warren Buffett's investment philosophy. For example, after the 2-day drop in the Nasdaq, the Robin Hoodiots are saying and quoting Warren Buffett, that be greedy when others are fearful. Nobody, you morons, nobody is fearful right now. If anything, everyone is greedy. The entire nation have seen a boom in options trading and gambling, and people who don't even know what the stock market is are participating and gambling in stocks. You have never seen what fear looks like. Go back and revisit 2009. That was fear, and that was the exact time Warren Buffett was actually buying stocks. And moving on to some sweet news. The devil and his organization SoftBank racked up over $3.7 billion in losses at their tech stock trading unit, meaning that all the gambling that SoftBank did by purchasing billions of dollars worth of options, creating gamma squeezes all over the place, this practice is firing back on their faces, and now they're racking up billions of dollars worth of losses. The question is, will the devil try another shot and create another gamma squeeze to try and recover some of his losses, or will he give up, take his losses off the table, and let the Nasdaq come down and crashing? COVID. And now to some COVID news and updates. We do have the New York governor imposing a curfew in restaurants, bars, and gyms as COVID-19 cases rise again in the New York City area. And here is another genius governor in my state of California who got his little crayon box and started coloring to tell us by color configuration whether your particular city and locality will be under lockdown or not. And for my particular city of San Diego, yesterday we moved from red to purple, which means the most non-essential, quote-unquote non-essential indoor businesses will be closed, including restaurants, gyms, bars, etc. More pain for small business here in the state of California and New York. And by the way, our genius governor, his tweet says that California is launching a blueprint for a safer economy. It's simple. Your country will be assigned a color based on, number one, case rate, number two, positivity rate. Your color determines how businesses can operate in your county, which sounds a little racist, right? Your color determines. Anyways, somebody need to give these genius governors the memo. The majority of COVID-19 infections are happening due to people gathering in their own private property, whether it's family visiting other members or people partying in houses and apartment buildings. We've seen that happen all the time, and even surging during lockdowns, specifically like we're seeing in the purple color configuration. So again, unless you can control what people can do in their own private property, you're not going to be able to stop the spreading of this virus effectively. But the moral of the story here, add that to the pile of negative economic news that we're having. Small businesses in California and New York are going to be destroyed. That creates a snowballing effect that goes back all the way to the lenders, banks, and real estate properties that are collecting rent from these small businesses. If they cannot operate, if they cannot make money, and there is no more stimulus and PPP loans, they're going to default on paying their loans to the banks, and they will not pay the lease payment to whoever is the property owner. And again, it is a domino effect that will hurt the entire picture of the micro economy. Because you have to remember, when these businesses are going to shut now and they're not going to have indoor seatings, etc., they're going to have to lay off their staff. We talked about this exactly when we covered the jobs report, that all of these leisure, hospitality, and restaurants jobs that we've been creating since August will come to a halt and even reverse lower. And now we have a series of lockdowns in New York, California, more states to come, and you will see the acceleration of job losses in these businesses heating up. Very bad news here. Moving on to the heat map analysis, and right away you see a different picture from the last few days. The big boxes of tech outperforming, but it is notable that Google is lagging say Facebook, Microsoft, Apple, because Google hasn't been hit as severely as these names during Mondays and Tuesdays rotation activities. So perhaps Google is a hybrid name here. It benefits whether we're rotating to the reopening stocks or if we're rotating back to growth. Google wins either way. It's a theory, it is not proven yet. We'll continue to watch Google to prove this theory or not. But you see gains across the semiconductor sector, Nvidia up 5%, even Intel up 2% or so, Qualcomm 5%, massive gains for this particular sector. Software rebounding, ServiceNow up over 4.5%, Salesforce, Shopify all up significantly. And what is lagging the day? The winners from the last few days, whether you're talking about the banking sector, notice how AXP, American Express, is down over 4%. This name popped over 20% on Monday alone. So it's giving up some of those gains today. And you see PayPal catching a bit. PayPal got hammered severely on Monday, and now you're seeing the rotation of the rotation, moving from AXP back to PayPal. Mixed picture in the healthcare sector. However, you see Abbott Laboratories up another 1.6%. On Monday, we called the downward move in Abbott Laboratories as a knee-jerk reaction and an opportunity to buy, and this has been proven as a good call, at least from the last couple of days worth of trading activities. And we see a modest red day in the energy sector. Exxon down another 1% or so. Chevron holding a little better. But again, we're seeing that rotation of the rotation, and you see pain in energy. And likewise, you see in industrials, the names that popped higher on Monday, whether we're talking about Boeing or Emerson. Remember, when we talked about Emerson, I said that the pop on Monday was an opportunity to fade. And I took half of my position off the table in Emerson and Disney. And you see Emerson down significantly today. Airlines, similar story. What is popping in industrials? UPS and FedEx, the laggards from Monday and Tuesday. What about consumer cyclicals? Amazon rebounding. And what is lagging? TJ Maxx, Marriott, cruises, casinos, rotation of the rotation right in front of you. Even in apparel, Lululemon was declining and lagging the market Monday and Tuesday. Today, Lulu in the green, TJ Maxx in the red. Similar story when we switched to communication services. We talked about Disney down 3% or so. More closures in California will likely to hit any optimism about reopening the parks anytime soon. Orange County, where Disney Park is, remains in the red category. It did not switch to purple yet, but logically it will very soon. What is popping in communication sector today? Netflix, Zoom, but you see other winners here, such as T-Mobile. T-Mobile been a winner since their earnings report, and it is a safe place to park your money, regardless of whether the rotation is going one way or the other. A rebound in video games names, specifically Take-Two, which got hammered severely on Monday. What do we see in consumer defensives? Similar story. You see STZ and Cisco severely in the red. Both names been benefiting severely and significantly during the rotation on Monday. And for STZ particularly, it's been rising since before the elections when we in this channel suggested buying STZ. What is rebounding today? You see Procter & Gamble, Clorox, Walmart, but again, Costco. You see Costco got hammered on Monday, and we said that this is an opportunity to buy Costco. It is premature to hit this name, and you see Costco rebounding today. Real estate, you see the rotation of the rotation within the sector. REITs for malls and any shopping centers reversing back to red, and you see AMT, American Tower, and industrial REITs back in the green. Utilities, similar story here. Muted. Utilities and materials have their own way regardless of the rotation. We see copper reversing in the red slightly and a very minor rebound in gold miners. What's going on with the rotation trade? Again, the rotation of the rotation is very clear here. You see every single name in the momentum, aka stay-at-home stocks sector, in the green. The biggest gains today are taking place in the names that got whacked severely in the last few days. chiefly in Shopify, PayPal, Amazon, Zoom, DocuSign, but the gains become muted when you talk about Facebook and Tesla, Google, Netflix. All of these names did not get whacked severely on Monday and Tuesday. Moving on, across the aisle, what do we see here? A retreat for airlines, cruises, Chevron just slightly, American Express, we talked about that. You see Six Flags, Disney. These are the names that are likely to get hit the hardest if we have another series of lockdowns, specifically in California or Florida. Ulta Beauty popped higher yesterday due to the news of their collaboration with Target. Today, it is giving up some of those gains from yesterday. Big down day for Cheesecake Factory. Not a surprise here, right after we got the news from New York and California. Cisco, similar story. MGM Grand, Live Nation, but you see some gains here from Planet Fitness, Marriott having good numbers out of China, operating over 60% of their occupancy, a huge improvement since the lockdown started in February. Mondelez also in the green. But here is the risk right now. Any good news regarding vaccines will pop these names higher. Any news about lockdowns will take these names lower. And we're going to continue to play that yo-yo game, and it's going to be very confusing based on the flow of news. We know we have Moderna, AstraZeneca, Johnson & Johnson, Eli Lilly, even Merck vaccine news coming very soon. You contrast that with the rising cases of COVID-19 and the lockdowns in California, New York, perhaps more states are going to follow, and it becomes really risky to be in either side of the aisle. We're about to see massive volatility wave hitting the market and a lot of frustration whether you're holding the stay-at-home stocks or the reopening stocks. Moving on to the charts analysis. What do we see here from the SPY? 15 minutes. Not a significant development here. The SPY pretty much flat since the activities yesterday, gapping higher in the morning, but closing on the flat line. And all we see here is a formation of a bear flag that will likely to continue to the downside. And we see the levels of 352 and 345.70 as the next support lines for the SPY. How do we know that the bear flag is out of the table and the SPY is ready to pop higher? You see the big breakdown candle from November 9th. The highs of that particular candle comes in at around 358.40. Now, if the SPY manages to close above 358.40, say by tomorrow, or Friday, closing above it decisively. What do we mean by decisively? From a longer time horizon, say the hourly chart, the 2-hour chart, closing above 358.40, which happens to be the top end of the breakdown candle, will mean that the bearish flag pattern is likely to be out of the window, and we will be ready to challenge all times highs once again. Moving on to the daily chart of the SPY, what do we see here? A clear reversal candle. No buts, no ifs, no nothing about it. But we see a massive series of gaps here that we probably haven't seen in the SPY chart for a long time. Perhaps ever. I don't recall seeing any time in the SPY chart where we've seen this kind of gaps series, both in a quantity and the magnitude of the move itself. And what we're seeing here right after the reversal candle is another series of gaps of dip buying and short covering. Now remember, all of these gaps are creating massive air pockets, and we will hit them and flush down significantly. You saw a taste of that on Monday, but another bigger taste coming your way very soon. And again, even if the SPY pops higher tomorrow and on Friday, the upper limit of that reversal candle will be extreme resistance and will be very hard for the SPY to break above it. I'm betting on a reversal even before we reach anywhere near the top of that reversal candle. Moving on to the Qs, and you see a gap higher right away in the morning from a 15 minutes charts perspective. And where did we catch the support? It is not a coincidence. from the line of 285.70, which was pre-drawn, and you see the SPY popping higher right after touching that particular line of support. And the picture remains the same. There is this mysterious entity that continues to pop and prop up equities higher in the overnight session. Today was no different. Yesterday they failed to do it and you saw a gap lower. Today they're pumping the Qs once again. But we see that this pump stuck on very low volume, which means that it is not definitive yet, raising the probability that today's action is a fake out and we will continue declining in the days to come unless and until we see more retail participation to the upside, because all of this gapping up is like performing a CPR on a patient. At some point you're hoping that his or her internal organs will take over and the heart will start beating on its own again. And what they're doing in the overnight session by pumping the market, they're hoping during trading hours that the retail traders are going to show up and pick up the indices from that point on. So far that did not happen. So they continue to pump the market higher and higher in the overnight session, hoping the retail traders will get the message and will stampede to buy tech names. Again, today's activities, very low volume, it does not count yet. And now that we're climbing higher, we need to identify a new line of resistance for the Qs. You see it right away. It is the 292 resistance line, and we do have the support line of 285.70. So for now, the Qs are in range, and breaking 292 will be extremely difficult without the help of another gap higher during the overnight session. And zooming out to cover the daily chart of the Qs, here is the bullish case scenario. And I've already started to hear this particular analysis from other YouTubers saying that we reversed in a bullish ABC pattern and all we're doing is we're taking a break, inviting newcomers to the market, and we will formulate the higher C leg very soon, challenging and beating all-time highs. But here is the bearish case. The bearish case says, look, we already tried to break all-time highs and we failed. We failed to even break the highs from last time around, formulating a double top formation, and we've already reversed and started to decline. And what we saw today was a series of short covering and low volume dip buying. Nothing new here. We will continue to decline further in the days to come. And by the way, what's going on with the VIX? Here is a daily chart of the VIX. We talked about the very pivotal support level of 24.8. On Monday, we managed to recapture it, and yesterday we closed above it. However, today we see a reversal and the VIX closing below 24.8. So this is not good news here for the bears. But remember, we are looking at the weekly chart. Closing below 24.8 from a weekly perspective will be the ultimate bad news for the bears. We still have 2 days worth of trading activities, and if you are a bear and if you're betting on a market reversal, you better hope that the VIX will be able to close the week above 24.8. The VIX remains historically elevated, but it is a very simple test here for the VIX to just close above 24.8. Now, doing so by the end of the week will show a weakening appetite for protection and more bullish sentiment in the market. And moving on to another important chart we've been eyeing all week, the TLT. Any significant development here today? Not really. We saw the TLT closing higher, but here it is from a 15 minutes perspective, not doing anything at all, staying flat, waiting and waiting and waiting. And my guess is that the TLT is waiting for the TNX, the 10 years treasury yields, to reach 1% before reversing for the TNX for yields lower, and that would come hand in hand with a reversal higher for the TLT. So let's move on to cover the TNX. And again, we talked about the level of 1%. It becomes a goal now to reach. It becomes and acts like a magnet for the chart to reach. We didn't go all the way to 96 basis points to just stop there and reverse lower. There is a goal there is a destination for yields to reach before retreating. And I bet that that level is the 1%, and it will create headlines all over CNBC, Bloomberg, etc. that the 10 years Treasury yields are trading at 1% once again. And by the way, that could take place in the overnight session. If we see another market manipulation overnight with the quote-unquote entity dumping bonds, pushing yields higher, we could see that 1% number happening overnight, and you have to keep your eyes open on Treasury yields, specifically the 10 years note. In this case, if we reach 1% overnight today or on Friday, and then we start reverse from that point on, that is your sign and signal that we will experience a reversal in the indices. Because 1% might not be much for me and you, but for big foreign buyers and holders, that would be good enough for risk-free investment, and you will see a rotation from equities to bonds. Not a significant one, but big enough to rattle the stock market and push Treasury yields once again lower than 1%. What about the Dixie? Any significant movement here? The dollar index is starting to lose its effect on the market. It's been flat throughout the week. We saw a slight climb higher, recapturing the former support level of 93. But these tiny moves in the dollar are likely to be not very significant and not impactful to the market. We need to see the dollar index moving back to the 94 territory, and then we will see the dollar index impacting the market significantly. But for now, the fear and the panic that we saw during Halloween in the market is nowhere to be found. Treasury yields climbing higher, bonds are being sold, the dollar index is muted, there is no rush to raise cash, gold trading in the downside, the VIX under 24.8. There is no fear whatsoever in the market yet, and that could be a sign of complacency here. Speaking of gold, here it is, big decline on Monday, rebound yesterday, slight declines today. The dollar index might have lost its control over the stock market and the indices, but it remains in control when it comes to the chart of gold. The dollar rising a little higher, gold pushing lower. What's going on with Apple? Here's a 15-minute chart. Remember, yesterday we said that Apple struggled to break above the 117 resistance. But I also said that the likelihood is Apple will give it another shot and try to break it once again. And this is exactly what happened today. Breaking the 117 level of resistance now becomes support. And where is the next level? 120. Very important and critical level for Apple. And now it becomes like a magnet and a goal to reach once again. Remember, in recent months, Apple failed to hold the level of 120 twice. Another failure, and it will be clear that traders, investors, whoever we're going to call them, are pretty convinced that Apple should not trade above 120. And this is why we continue to think that this level is very pivotal and critical point, not just for Apple, but for the entire market. Moving on to General Motors, here is a weekly chart and a tweet that I released today that I liquidated my entire position in General Motors. Remember, we identified the trend line for months now, and I bought the dip in August once we reached the trend line and bounced from it. Now, the level of 33 was significant resistance and former support for the name. Breaking above it created momentum and a blast higher, and now we're reaching another resistance line, a very important one at the level of 41. To me, that was enough. I don't think we're gonna blast once again higher than 41 and just trade to all-time highs. There are a lot of challenges to come in the auto industry. They're not out of the woods yet, not even close. When I see technical resistance right here, and by the way, the gains since I bought the name over 60% in a very short amount of time. We're talking from August to September, October, November, not even 3 months. And you made over 60% gains. It is time to take profits off the table. And now I'm eyeing the level of 33 once again as a potential re-entry point. And the level of 33, by the way, coincides with the support line and the trend line. I see overbought conditions in the name here and declines to follow. I sold my stake and I actually bought put options on General Motors. Moving on to MasterCard. Here is the daily chart. No markings, annotations by me beside the level of support of 280. And check out the volatility in this name. Right after earnings, MasterCard collapsed significantly, and from the highs, it went down over 23%. However, since the post-election mysterious entity pumps, MasterCard managed to blast over 27% back to the upside and retreated from that point on in the last few days. And here is what I see. Remember, the entire pump behind MasterCard was an assumption that the stay-at-home culture will accelerate online buying and usage of MasterCard. In the last earnings report, we found out that the emperor has no clothes and MasterCard is nowhere to be called a beneficiary of the stay-at-home culture. The surge of MasterCard usage during the second quarter coincided with the stimulus. And now that the stimulus is out of the way, we see MasterCard numbers showing up to be abysmal. So here is what I see. I see a descending resistance line making a series of lower highs in MasterCard, and I see that the reversal from the highs will continue to accelerate to close some of the gaps, beginning with the first gap, which coincides with a decline of about 5% or so from this point on. And now to the last chart of the day of Alibaba. I've been watching this name very closely today. I was expecting a rebound in Alibaba this week and for the name to outperform, and I was 100% wrong. The name continued to get whacked severely, and now we do have the level of about 266, which is very pivotal and very significant. The level to be specific is 265.80, but for simplicity reasons, we're rounding it up to 266. And I'll be watching Alibaba very closely tomorrow, because if we see further declines in Alibaba closing far below the 266 level, that means that we will see significant declines in the name, leading all the way to the next significant support level of 212.5. That would be a very massive decline for the name here. Now let me show you the behavior of the chart from a 15 minutes perspective. Today, the action was not conclusive whatsoever. All what Alibaba did today is hugging this support line of 266. Tomorrow is a very important day for the name. It's time for Alibaba to put up or shut up. Either it's going to trade and gap higher from 266, and that would be the reversal and the opportunity to buy Alibaba again, or is it going to break to the downside and then Alibaba will be a stone cold short. And we know that the Chinese government is coming after Alibaba for monopoly practices, which is very concerning. Perhaps Jack Ma forgot to pay his respects and kiss the ring of the big boss. And now let's move on to conclude this video. Very low volume day, Veterans Day as expected, closing in the green, specifically for the Nasdaq, but flat for the Dow and the SPY. What do we make from today's activities? Nothing really. You cannot make a conclusion based on the low volume we've seen today. But it shows you a little hint and a glimpse of where the retail trader's sentiment is. The retail trader is still a believer in the growth trade, and they see the dips in names like Facebook, Microsoft, Shopify, Zoom, etc. as an opportunity to buy. But keep in mind that if you are thinking of rotating back to growth and buying the dip in these names, this time around it's not going to be very easy for you, because any potential vaccine optimism headline, vaccine pump, whatever you want to call it, will make the back to growth trade very jittery, and we're perhaps going to see rotation of the rotation of the rotation, and you're going to have a massive whiplash. The thing to do here is stay with your long-term investment strategy, whatever it is. What you have to do is protect yourself via options trading, meaning if you have names in the travel sector or in the growth sector, continue to buy put options and protections on these names, specifically when the VIX dips lower as it is trading right now, because option premiums are cheaper than last week. And perhaps they're not going to be that cheap next week if we see an explosion in the VIX once again. So it is an opportunity to buy protection in the names that you already own. And perhaps if we're going to trade in a range right now, that selling upside calls for the names that you have in your portfolio is a pretty good idea. So you sell upside calls, you use that money to buy protections on the downside. That way, you're not going to experience whiplash and lose any sleep, whether the market trades one way or the other. Pops higher, you win. Goes lower, you win too. And before I log off, a reminder, we do have Jerome speaking tomorrow and the weekly unemployment claims, which will be very important to watch. So big day tomorrow, and you already know what to watch for. Apple 120, VIX 24.8, a reversal in the TLT, Treasury yields, rates 1%, whether we reach that overnight or not. You are, after all, very well equipped to be ahead of this market. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.